what are the industries that I would invest in? So there are 3, 4 industries that I put up. Number one is SME financing. Number two is logistics. Number three is batteries, and number four is entertainment. So first, I'm going to speak about SME financing, and then maybe after I give my first one, maybe then Siddharth, you can talk about your first one. But yeah, in SME financing, uh, the first question is, why do I think SME financing is a super important field to invest in, and why do I think we can make money out of it? So we've spoken about SME financing in the past. That basically SMEs, they account for 30% of the GDP of India. They account for 48% of the total exports of India, and 40% of India's workforce are employed by SMEs. But there is no financing for them. And the reason there's no financing for them is that there are a lot. They don't have collateral. They're not able to show past credit history, and there's just a lot of reasons um, why there's no financing for them. But the point is that this is such a huge market. This is 30% of the entire GDP of the country lacks proper financing. Now,
I want to add something here, right? It's not like these people are not using capital, right? There is a full blown unorganized market where the capital exchange and financing happens, and it's not like you have to go create the market. You just have to organize this market in order to make
yeah,
this big, make it big in SME financing.
yeah, exactly. And so anyway, in the finance world, there's a concept of bill discounting, right? It's a very common concept. Basically, you get an order from a customer, and in order to get the working capital for that, you discount the bill, or you supply the material, and then your customer says, I'll pay you in 60 days, but you say like, hey, I want the money now. You go to a bank, you say that like, hey, this person has promised to pay in 60 days, can you give me the money now? The bank charges a certain amount, and you get your money now. But as
The
anybody who runs a business,
realistically, Sahil, you know it. When you go to the bank says no. The bank doesn't discount. The
exactly,
bank.
exactly. That's where I was going to get to. That realistically, that unless you're a really well organized business, it bill discounting is really a hassle. It's not as easy as I make it sound, but it is a super useful tool for businesses so that you can get your working capital, so that you can work on your next order. So there's several companies that are doing this, and so that you had given me the constraint of not picking companies that are too big. So there's a company called Drip Capital. They've raised like $85 million, but they're too big in my opinion for the conversation that we're having right now. But there's another company that I have actually used. It's called M1 Exchange. So M1 Exchange is basically using this platform called Treads, which is a government platform that allows for bill discounting. So you can basically go on there. You can say that, hey, I have this bill from this so and so company, and then people can come on the platform and they can say that, hey, I want to discount this bill, or I do not want to discount this bill, or whatever. Right? So it provides that marketplace. It provides the ability for people, small businesses, to go online and be able to show their bills to many NBFCs, banks, or whoever these people are, who, if they want to take the risk, they can discount your bill. So, two reasons why I would want to invest in SME financing, and M1 Exchange is a good, in my opinion, it's a good example of the SME financing world. Is that number one, this is a marketplace. This is a marketplace business. So a marketplace business, if it does really well, if it does well, it's going to do really well, and it's going to basically take over the market for SME financing. And secondly, SME financing, in my opinion, is not a problem that should be solved. It is a problem that will be solved, because we're not going to reach that $5 trillion, $10 trillion mark of Indian GDP unless we solve this issue of SME financing. And there are a lot of companies that are trying to focus on it. But I think this bill discounting thing is the easiest way to solve it, and probably the best way to solve it. Yeah.
Yeah, if I had to add, I think the other reason why I'm bullish on the SME ecosystem for financing is because the government is doing a lot in their India digital stack to open credit. So they have this thing called Open Credit Enablement Framework, OCIN. That's what it's called, and I think that's going to be released in this year or next year. So it's going to present a lot of opportunities for people to digitally sort of give, these loans and stuff like that. So a lot of these young nimble startups are going to be the one who are actually able to adapt to these new frameworks, versus the old NBFCs are going to be, okay, how do we really do this, right? So that's the other reason why I would pick, startups in the SME financing space. I agree with this bet, even though it's not in my list, but I do.
Okay, so Siddharth, what's your first pick? What? And by the way, I should mention that M1 Exchange has gotten $19 million in funding so far. So not a crazy amount, but they've done a decent amount of funding so far. But yeah, what's
Okay.
your first pick?
Yeah. So this is interesting, because I said I'm not going to be investing in D2C brands, right? That said, I don't think the movement to D2C brands is going anywhere. I think we're going to see more and more people come and launch good D2C brands. What I think is going to be interesting is that whole, discussion that we've had in providing shovels when there's a gold rush, right? I think D2C brands are here to stay. I think the entire consumer product, ecosystem that's led by the Hindustan Unilevers and PNGs of the world, that is going to get disrupted, and these are large businesses that are going to get disrupted. So there will be consumer product, brands that are going to come up, which are more modern, direct to consumer, or whatnot, right? So I am very keen on investing in infrastructure companies that provide tools and software and services to these D2C brands, right? And if you break it down, there's obviously product, there's the agency angle of, like, performance marketing and all of that. These are not venture fundable ideas, but those companies are going to do well over the next few years, I think. But two companies, or two category of companies that interest me, one is this D2C conversational commerce, right? Using these WhatsApp and messenger tools and stuff like that, moving away from email and moving to more chat tools, and providing this SaaS layer or software layer for people to manage this entire experience of communicating with your customer at the right time, at the right, chat, whatever, Facebook Messenger, Instagram Messenger, WhatsApp, or whoever, whatever comes next, SMS marketing, all of these things, right? So there are a couple of companies in India that are providing these services. There's one called ByteSpeed that only works on Shopify right now, and there's one called LimeChat. I think both of these companies are doing something similar, right? Both of these are just raised a series A. I don't know the exact numbers, but between 2 to 4 million. That's the range that they've raised it at. Raised. That's the amount that they've raised, and I think both these companies are extremely interesting with applications outside of India. That's the other angle that I generally have is, can you build it in India and sell it to the world? Because those are relatively easier unit economics businesses than building in India and build and selling in India, right? So ByteSpeed and LimeChat are going to be my first in the D2C infrastructure pick. One of those, because I haven't spoken to the founders, I haven't seen the product, so I can't really decide which one out of the two, but probably one of those. And the other thing that I think is going to be very interesting is companies like Velocity and Club, which do revenue based financing, right? I genuinely think D2C brands do not need as much venture capital. They probably need some seed capital to get started and everything. But if you're building the right kind of D2C brand, you should have the gross margin of 70, 80, 100, 150, 200%, depending on the product lines you are in, and therefore be able to grow using revenue financing rather than venture capital money. So I think these companies like Velocity and Club, that do revenue based financing, that's the other D2C infrastructure company, again one of these companies. So the other company is also the infrastructure company, within the infrastructure segment. These are people who provide APIs for different products and services to integrate audio and live video experiences within their applications, right? I think live audio and live video are here to stay. I think these are those, impact of COVID that's not going to go away anytime soon. There are multiple use cases for live video, live audio across different domains, from e-commerce to, remote work to uh, virtual events, and a bunch of other segments where I think this concept of live audio and live video within applications is going to be very strong. There are a couple of companies called Dyte, DYTE, and another one called 100ms. Their website is 100ms.live. They provide the infrastructure, API infrastructure, basically an API where you can connect automatically to a brilliant live audio and live video experience on your app. Again, the same concept, infrastructure companies, they're going to be, if they do it well, they're going to be profitable, and you can build it in India and sell it truly to the rest of the world. So which is why I think these are good businesses to invest in.
As Siddharth mentioned, also found one company that I think is building in India for the world, and it's building in India for the world in an industry that I think is super interesting, which is batteries. So the question is, why do I think batteries are important, right? The first reason, I mean, the main reason is that India does not have any battery manufacturing capacity right now. When I'm talking about batteries, I'm talking about lithium ion batteries that are used for electric vehicles and also that are used for grid applications, right? So when I say grid applications, I mean that like you have a renewable park, and with that renewable park, you generally need some kind of battery storage when the sun sets, and so that you're able to have proper power loading. So as we keep going down this renewable and this EV revolution, the amount of batteries that are required is just going to keep increasing. It's going to be an exponential increase. So what I was reading was that just for EV applications, the requirement for batteries in India this year in 2022 was 10 gigawatt hours. Okay, so but what does that mean? 10 gigawatt hours means 100, means 1 million kilowatt hours, and each kilowatt hour costs around $132 in the battery cost. So just this year, we are probably going to do $1.3 billion of battery imports. And this is supposed to grow like 15-20x in the next couple of years. So you can imagine that the amount of battery imports is going to go into the tens of millions, billions. Sorry, it's going to go into the tens of billions of dollars. And this is just India. Now think about China, think about the US, think about Europe, think about Australia. All of these places are going to have huge battery applications. And and because the battery is such an expensive piece of equipment in an electric vehicle, it's something like 30 to 50% of the entire cost of the electric vehicle, even at the price now where batteries have gone down in price by like I think 40-50% of the last couple of years, right? So batteries are significant component of an electric vehicle. You need a system to manage the battery properly so that it lasts for a long time. And this is where I found the first startup, which is called Ion Energy. Okay, so Ion Energy has raised about $4.5 million, and they're basically taking a software approach of doing battery design, battery analytics, and basically a battery management system. And being what it is, a software product, they can sell across the world. I was talking to somebody from Ion Energy, and they told me that they have a holding company abroad, they have an Indian company, and they have another, I think, an American company as well. So that means that they're already thinking about a global approach to this whole battery management system. And that makes me super interested in this company, because number one, I think batteries are really the future, and number two, they're doing batteries in a way which I feel like can have a global impact. Number two, okay, just yesterday, I was having a conversation with a friend. I was like, "Oh yeah, batteries are a really cool space," and he was like, "Why do you care about batteries? Adani can just come into batteries any day they want, and they can just set up a huge factory because all you need is capital. Because there's not so much tech in batteries, right?" And I realized, yeah, this guy is completely 100% correct. Then I was thinking about what are the different other plays, and then it got me to an episode that we did a few weeks ago about e-waste recycling, right? And you mentioned about how currently e-waste in India is like 90% of it goes to the informal route, right? And part of that is the big question about what the hell is going to happen to battery recycling in 10, 15, 20 years, because all of these batteries have life cycles of about 20 years. So yeah, that got me to my next company, which is called Loham Clean Tech. So they've raised about $7 million so far, and they're basically recovering critical material from used batteries, and they're recycling it, and then they're using that to build new batteries, right? So it has that full angle of recycling, e-waste recycling, which is going to become super important in the future, and it's still within the battery space, which I think I'm super bullish about. Yeah, any comments so far?
Yeah, just to your friend's point, I think ion energy is slightly different in the sense that a lot of the technology sort of R&D that you do is not something that an Adani can come and do overnight. They might be able to manufacture the batteries overnight by putting in a lot of capital, but a lot of R&D that happens in technology applications and stuff like this takes a lot of time. And what ends up happening is Adani then start looking for, acquisition targets, right? I think Reliance is making big moves in this entire space. Reliance invested in a company called Alti Green. We've had the founder of Alti Green, Mr. Amitabh Sharan, on the podcast to talk about what they're building, and Reliance invested a decent amount of money in them, right? So I think that's what happens with these kind of companies. So I do agree that the bet is pretty neat. I didn't know about any of these companies, so thank you for sharing those. Okay.
Wow, I'm shocked that I was able to come up with companies that you had not heard about. Sorry, I still have three, four more companies.
The next company is something that we've discussed way back in 2020, right? I come from the financial services world where I've seen, I was at off business, so I've seen the financial services world and the value chain in this world. And there's something called as digital selling agents, where they are the drivers of a lot of these product selling that happens, from business loan to mortgages to credit cards to whatnot. They're the feet on the ground who are selling these products from these banks, right, or NBFCs. This is a completely unorganized market. Like, there is there are DSA companies or DSA sort of aggregators at a local level, maybe at a Jaipur level, at an Indore level, at a Delhi level, but there are very few pan India brands on this, and even if they are, they're completely offline, right? So there's this company called One Code. I absolutely love the model. This is the exact model that we had discussed back in 2020. I would have invested, if somebody told me about One Code back then, I would have invested back then. They've now raised their Series A of $11 million. I am glad this company is being built. Here's what they do. There is already a large number of these agents who are in their 30s, 40s, 50s, who are selling insurance, credit cards, loans, whatnot. That market already exists, but they're no way connected. They're no way in a digital ecosystem, right? They're doing it for Bajaj, they're doing it for LIC, they're doing it for different places. What One Code is doing is they've brought a platform where all the new age fintech companies and the banks can come together and put their product that needs to be sold, their credit cards, their loans, whatever different types of products. And there are new products, right? So it's important for these agents to get trained on the new products as well, because there's a lot of innovation happening in the fintech space at the product level also. So on one side, they have all these companies where they can come and list their products, that this is what I want to sell. On the other end of the spectrum, they have these agents, typically offline agents. They are not making these agents. I'm sure they'll eventually sort of start training people to become agents, but there's a large number of people who are already agents. They bring these people on the platform and give them training, give them an understanding of what the product is, give them an understanding of what their payout is going to be, give them understanding of how their payout is going to be managed. A lot of these things that were being done offline are now being digitized. What they're doing is basically the layer between the companies and these agents, and providing the technology solution there. Again, the infrastructure play, again something that you can take a cut off, like a small margin of every product sold, because you're helping sort of make the management happen. And one of those things which is higher barriers to entry, because not many people understand how this ecosystem works, right? Consumer products, one of the reasons why I don't like consumer products, because everybody's having that pain point. Everybody can wake up tomorrow and say that, hey, I want to start something like this. I've obviously oversimplified it. Consumer companies are extremely hard to build, but the barriers to entry are slower, or barriers to entry are lower compared to these B2B infrastructure companies. So One Code is another company that I think is going to be pretty interesting, and maybe has more applications, or maybe can expand to other Southeast Asian countries, if not the West. But I think it has expansion sort of routes in Southeast Asian countries, because they are similar models.
So the next segment sector I want to talk about is logistics, right? And so again, this goes back to the episode we did with Sajit last week, and in the report that he had, the Indus Valley report. One of my favorite graphs in there was what he called a logistics tax, and he framed basically logistics as a cost of GDP for different countries. In Germany, it's 8% of GDP. In China, it's 9%. US, it's 10%. In India, is 14%. So we are like 6% higher than Germany, 5% higher than China. And why is our logistics so expensive? Our logistics is that expensive because our infrastructure is just ridiculously bad. I mean, I don't think I will be insulting anyone by saying that our infrastructure sucks. Like Bombay right now is just completely broke. Infrastructure in India is bad. I think that is a given. As a result of which, the amount that we pay in our products for shipping, etc., is high. And so my perspective is that logistics is needs to be solved, right? And there are a couple of startups that I have identified, which I think are doing quite well in the logistics space. I mean, you could talk about Rivigo and all those guys, but Rivigo has kind of failed. And from the people I've spoken in the trucking industry, that Rivigo is not doing very well. But one company that I've been seeing a lot lately, I've been traveling a lot on the Bombay Pune Expressway, and I've been seeing Wheels Eye everywhere. I feel like half the trucks that I see on the road are carrying this sticker from Wheels Eye. So, what is Wheels Eye? Visa is basically um, it's basically a technology platform for trucking operators, and for it's basically trying to organize the unorganized logistics sector in India. Like they give you GPS tracking, they give you fast tags, they give you data analytic solutions, and they've already been doing like 80-90 crores of revenue. So it's not like they're too small, and they're doing that with a funding of I forgot how much funding they've gotten. But they haven't taken. Oh yeah, what I saw on Crunchbase was that they got funding of 70 million rupees, which is about $1 million. Wheels Eye to me seems a bit interesting. They're selling a lot of their SaaS product. And in fact, one interesting thing in there, if you look at their revenue breakup, is their SaaS product has become the major driver of revenue for them, right? So in FY20, their SaaS product was driving revenue of only about 13 crores. And if FY21, their SaaS product was driving revenues of 36 crores. So they've pivoted a lot to SaaS, which makes me super happy, which tells me that this is going to be bringing them long-term revenues,
Yeah,
right?
I think this
So
is
now,
going back to Sajid's point on SaaS transactions that's happening in India, right? I think Sastra, as he called it, again, check out the previous episode. I think Wheelseye could potentially do something similar, which is SaaS led, but at the transaction layer where you're managing the value chain or one part of the value chain and the transaction in that value chain within logistics.
yeah, and the thing is that they're offering so many solutions for trucking operators, because I feel like trucking operators are going to come in for something small and they're eventually going to go up to that SaaS solution. And when it comes to SaaS, you spend a lot of money initially to build the product, but eventually I think they're going to become quite capital efficient. And so I'm a little bit optimistic about Wheelseye. I would love to hear other people's opinion on Wheelseye, because I've tried to do quite a bit of research on them, but I've not been able to find a lot of opinion pieces on them. So yeah, I would love to learn more about Wheelseye. The second company that I had in my logistics part of it was a company called Freightwaller. Okay, two reasons I picked them. Number one, they have Wala in their name, so I'm obviously biased towards them. Any Wala is a good Wala. Number two, I've actually met them. I met them a couple of years ago when they just started,
So I'll have
and
to explain that joke. I am sorry. I'm sorry. I'm sorry. I have to explain that joke because I don't think people know your last name. His last name is Sahil Khandwala, which is where the joke comes from. You can go back to what you were saying.
if you have to explain a joke, it's not worth it. Anyway, that means half of my jokes are not worth it. Um, yeah, Freightwall. I met them a couple of years, and they basically what they're doing is they're digitizing freight forwarding. Right? If you know what freight forwarding is basically they're these guys who help you do export shipments. And with the emphasis that India has on exports, with the emphasis that India is putting on manufacturing and all of that stuff, freight forwarding is not a business that's going to disappear at any point in time. And just like trucking is an extremely unorganized sector, and Visa is trying to organize the trucking sector. Freight forwarding is not as unorganized, because you can't just, like with trucking, you can just buy a truck and start your own trucking company. Freight forwarding requires a little bit more organization, but there are a lot of freight forwarders that exist. How can you organize that sector and consolidate it? And I think that's what Freightwalla is trying to do, and that's what maybe they might achieve at one point. They've raised around $4 million, and on top of just normal freight forwarding, I believe they're also doing some kind of SME financing. And again, going back to my initial thoughts on SME financing, that anybody who's able to do something in SME financing well, in my books, is going to succeed. So yeah, on the logistics sector, those are my two picks for now. I have one sector left, entertainment, but before that, let's go into yours.
Yeah, just in addition to the logistics sector, not logistics, but specifically the import export thing that you spoke about, there's another company that I think got funded this week or something like that, called EximPe. EXIMPE. They raised $3.5 million, and they are doing something similar where they're going to be digitizing the workflows for cross border trade, which is import and export, and providing financial services, right?
You know
So
what? I want to explain a little bit about why this is a big deal. If people are not doing exports, you probably don't know that the amount of paperwork that goes into exports is just ridiculous. We have an entire department that only does exim paperwork because it is a lot. Working with shipping lines, working with um, the government paperwork, everything, it's an insane amount of paperwork. And then on the other end of it, doing all the accounting and banking, it's a lot. So somebody who's solving that, I think that is definitely a good business. Anyway, so that what's your next one?
the other one that I have is in another large market, insurance. I think insurance is a huge industry in India, consumer business both. There have been good consumer insurance startups that have come. I think that market is slightly more matured, but I think the B2B insurance market is very sort of immature. It's very offline, very unorganized. I think there's a company called Virak. I know very little about them. I follow the founder Rahul on LinkedIn and Twitter. I like his clarity of thought on some of the things that he's going through in his startup. But I think the business that they're going after, which is B2B insurance, I think that's a large industry that's waiting for a good solution, good service, good products. I'm going to bet on them, as even though I don't know as much, but just the founder market sort of that they're going after makes me feel like it could be an interesting play.
So the last two companies that I have on my list are both companies that we have interviewed before, and I'm not going to be able to do justice to how great these companies are. We have done two fabulous episodes. In fact, two of our best episodes, I would say, are number one with Router. You can go check out that episode. In fact, what's his name?
Piyush Kumar.
In fact, Piyush Kumar came back and said that the episode that we did with him actually helped him raise his next round of funding. So go check out the episode with Router. And the second company is Stage. Stage is Haryani content for Haryana. And this was with Vinay, and they basically do regional content. We had a conversation with their founder. Really, really great episode. I would encourage you to go check out that episode. This just 2 or 3 episodes ago, so it's not that long ago.